All right, let's kick off the close of the first market day of the week with a comprehensive breakdown of market activities. This is Market Pulse on News Central in partnership with Nairmetrics. Welcome and apologies for the slight delay. I am your host, Joanna Mustapha, and on the show today, ahead of tomorrow, the meeting MPC commenced today, but the announcement will be made tomorrow. So there's anticipation ahead of tomorrow's MPC announcement. Do rate hikes really affect the Nigerian stock market? That's perhaps a conversation we need to have. As well, a credit rating company is set to meet the needs of Africa's sovereign borrowers, should be ready to go up by next year. So we'll see how that, pans out. And we'll also spotlight a stock that just couldn't stay off the top gainers charts last week. Didn't make it this week, but we're driving this stock. We want to know what's driving this stock and how far this rally will stretch out. These stories and a lot more on the show today. But first, we're going to head over to the NGX as of close of today's market. And, it started off, slow trading day, or probably the slowest trading day of the year. But there was a flurry of activities. That flurry of activities saw 110 million shares of rice producers, Ella Lakes. They traded at the tail end of the market. And that, of course, boosted market activities. Top gainers, on the list today, we are seeing a number of shares. United Capital is not on that list. If we also take a look at the top losers, we'll also see a good number of, them there. Top movers, noticeably absent, missing in action, are banking stocks, right? FCMB is on the list, but, we're not really seeing that trade volume from banking stocks this week as we did previous weeks. Perhaps some sort of reaction to the news that has been flowing in over the weekend and over the week's windfall tax and, a lot more. I'm sure that's news for investors, and that could give them a bit of cold feet. Currency market, the Naira did gain marginally today. So, that's possibly good news. CBN's efforts perhaps beginning to pay off. We're going to get a breakdown, right, of activities influencing the markets across Africa. Adebanjo, senior research analyst at Cardinal Stone Securities, will be joining me after this break to assess the pulse of today's market. So stay with us. All right, you're tuned in to Market Pulse. Right now, we are spotlighting a particular stock that, has gotten a lot of interest, right? We're talking United Capital stocks. It was on the top gainers list quite a lot last week, even though this week it didn't really make that top, well, at least today, the beginning of the week, we haven't seen it make top gainers. But yes, it was a top gainer on the charts for most of last week. So we're going to get David Olujinmi, who'll be joining us now to give us some insight into, what's driving investor confidence in this particular stock. David Olujinmi, financial markets analyst with Nairmetrics. Great to have you in.
Thank you, Joanna. Thank you very much.
All right, so we're spotlighting this particular stock that emerged the best performing in the week behind us. And from the looks of things today, it hasn't really continued on that streak. There are a lot of people that are saying that if you had invested in this particular stock, you would have, cashed out majorly. United Capital, which is into investment banking, financial advisory, and fund management, and was a top gainer in the NGX for the week ending July 19th. Its share price appreciated by 42.78% to close at 14.55 Naira. A stock that was not just, it was just about 18 Naira, right, in the month of June. Last week alone, United Capital's share price moved from 28 Naira 40 kobo to 14 Naira 55 kobo. And if you're joining us, the poll is up on X at Nairmetrics. The best performing stock last week, buy, sell, or hold. Is now a good time, or is the gaining season for this particular stock behind us? Let us know up on that poll. David Olujinmi, let's come to you now. Once again, welcome. Just how much would an investor have made now if they had invested, say, $1 million in this stock in June?
Okay, I can't say categorically how much they would have gained if they put their money in June, but I'll say from the start of the year. This year, the stock has gained about 76%. So if you put ₦1 million in, you probably have a capital's gain of about 760,000 Naira. That's quite a lot, That's a lot of gain. But from July 1 till last week, July 19, we'd say you have about 45,000 thereabout, because the stock did most of its gain in July, the week between July 15 to July 19, but the weeks preceding it was just marginal gains recorded here and there.
And what would you say is driving investor interest in this particular stock?
Very simple. The announcement of interim dividends, the plan to pay interim dividends for the first time in its history. United Capital is going to be paying interim dividends of 90 kobo per share plus a bonus share issuance of about, I think, 1 share for every 2 shares held. That's a lot. That's a lot of returns to investors. The bank made a lot of headway in the first half of 2024. The first half of 2024, the bank made a profit of about 7 billion during the period, which is one of the highest profit it made, I think, ever within that period. So this year has been a good year financially for the bank, majorly based on its disposal of investment securities. It did pay back, it did pay off, or it did sell out some of the bonds it was holding within the period. So majorly, the 2 things that were majorly responsible was the announcement of its interim dividends and bonus share issuance, which are drivers, which are keys that show how much that company is doing, how well the company is performing financially in 2024.
Right. So, I mean, that's off the back of great performance and the first time United Capital will be paying dividend. That obviously has whet investor appetite. But can it sustain this stock, or is this just a short-term rally?
So basically, I would like to say, I wouldn't describe it as a short-term rally because there is a time period, the share cutoff period. For example, we've seen today that the stock has declined by about 4.7%. But it's not going to continue declining because a lot of people want to key into, they want to enjoy the returns on their investment. They want to enjoy dividends. So we are still going to see investor interest. But what we've just seen today is a little bit of profit taking, which is normal. So I anticipate that from tomorrow to the end of this week, we'll see marginal gains on United Capital. Plus, if you look at the activities of today, Friday till today, the stock has been one of the most traded stocks in the market. This on Friday did about 56 million shares for a stock that is trading at for a stock that has a share price of about 14 naira. That's a lot. Today it did about 20 million shares. So we see that there's heightened investor interest. It's not a short-term rally, but we're going to see a lot more of profit taking. Then we're going to see buying and selling. So there's going to be like an exchange. But we'll be seeing marginal gains. I'm anticipating that we'll be seeing just marginal gains. We're not going to be seeing 10% gains anymore, at least for the time being.
All right, marginal gains, perhaps things leveling out a bit for that particular stock. But then there are those who are also bringing up the conversation that stock right now is overvalued. What do you have to say to that?
The idea of the stock being overvalued, that's because there are different brokers who there's something they call a target price, that they've set a target price in their analysis over time. When the stock begins to appreciate above the target price, then there's the idea that the stock is overvalued. But if you take a look at the market for this year, if you take a look at some of the stocks that are listed on the NGX this year, you discover that some of these stocks have done above their target price, far above their target price. So for a stock that is displaying strong financial performance, it has become quite customary right now that we'll see those stocks staying at prices that analysts will consider overvalued. So, for example, we saw Presco. Presco is getting close to the 300 naira mark per share, becoming one of the most expensive shares in the market. And a lot of analysts have said sell because they feel like it's overvalued. But that's one of the companies that provides the when we talk of return on investment, we're talking of dividends. We're talking of the value that the amount of dividends paid to the share price. Right. The return on investment of the share has been quite high. So we'll see investor interest still in that stock. So for United Capital, we are seeing the return on investment is not so high, but at the end of the year, I don't know, I think we would see if they are going to pay 90 kobo dividends this year. I'm probably anticipating that they will pay dividends of between 1.2 naira to 1.5 naira at the end of the year.
All right. So, I mean, that's definitely a stock we'll be keeping our eyes on, and whether they're able to keep up with this dividend payment going forward, not just the interim dividend payment. And if you look at the NGX right now, in that era where financial service sector seems to be dominating a bulk of the activity on the NGX.
Yes,
what does this say? Although today we didn't really see that much activity, perhaps cooling down a bit there. But what does this say about, our economy, and how should this perhaps guide our investment portfolio?
So one thing that we see in the NGX, first of all, it's almost a replica of the entire economy. It's almost a replica, not fully a replica, but sometimes it replicates what goes on in the economy. So in 2023, one of the fastest growing sectors in the economy by GDP, one of the fastest growing sectors in the economy was the financial services sector. The sector grew by about 30%, while we saw growth of about, I think between 2 to 3% in the manufacturing sector. We saw reduced growth in the oil sector. We saw growth of, less than, I don't even think we saw a growth in the oil sector last year. So basically, we are in that phase where a lot of activity is happening on the financial services side. And the financial services industry in the NGX is buoyed by the banking stocks. So we see our banking stocks displaying a lot of resilience. They were very huge gainers last year. They were the most profitable entities in the country last year. So we're seeing them driving investor interest in the financial services sector. So
and with conversations around, eating into that interest with, taxation, do you think that will remain the case?
Like
the profit,
we discussed last week, the windfall tax is probably going to be a one-time thing. I'm not expecting the government to keep up with that particular thing, that particular policy. I think it's just something that just occurred. But I'm not expecting to see a further drive down the profits of our banks and our financial services industries.
Right.
I'm not expecting to see anything in that dimension anytime soon.
Interesting insight. Thank you. Interesting insight from you, David, there. It's over to you right now. Buy, sell, or hold. It's over to you. Head over to X at Nairmetrics and let us know with what you know now about United Capital Limited. Is this something that you would be buying, selling, or holding? We'll get into that, much later. And of course, this is still Market Pulse right here on News Central in partnership with Nairmetrics. Stay with us. Market Pulse. Staying with me is David Olujinmi, and it's been interesting to get, his insights, or continue to get his insights on Pulse of the Day, and, what's happening across Africa. Let's start with, continental matter, of course. On Saturday, the African Union Commissioner for Economic Development, Trade, Tourism, Industry, and Minerals announced that the continent is on track to establish a credit rating agency by 2025, specifically designed to cater to Africa's sovereign borrowers. It's currently in the operationalization stage. Some are of the view that history shows us that Africa has been treated unfairly by the likes of Fitch and Moody's when it comes to ratings and borrowings cost. Do you align with this view, and do you see it as a reason enough to necessitate the emergence of an African credit rating agency, or there are other ways to navigate this? David?
At this point, I totally agree with the sentiment. It's become a necessity. So we have these credit rating agencies across the world, Fitch Rating, S&P, Moody's, who don't have bases here in Africa. We have, I don't think there's an S&P office in Lagos. If there is, maybe I'll try to know where it is. Or maybe they probably have one in Johannesburg in South Africa. But they have these countries, they have these organizations, these private organizations rating African sovereign entities, African banks, African governments, and their ability to pay back loans. So what they basically do is that I feel like the entire world feeds off of Africa's inability to do certain things for itself. So when Fitch rates your government's ability to borrow credit, maybe they give it a CCC plus. You are thrown into the junk rated tier. So we have African countries borrowing at the international market at 7%, 8%, 9%. I think in Nigeria's case about 8%, 8.5%. Our Euro bonds are becoming up to the neck. Our government can't take it anymore. And now you have the U.S. government borrowing at 4.5%. In fact, last year, the U.S. T-bills did 4.5%. It's averagely between 4% to 4.25%, and it's still in dollars. And you have Kenya borrowing at 7%. You have Ghana borrowing at 10%. It's not worth it. It's not okay. So we need to have a system that caters for us. So I'll give an example with Nigerian banks. You have Access Bank rated BBB plus by S&P. You have it rated CCC. You have some of our banks rated CCC plus. And in reality, these banks have never defaulted on a bond. They've never defaulted on a commercial bond. They've never defaulted on anything they've borrowed in the capital markets before. So I think it's a step that has become necessary in the wake of defaults by African governments across from Zambia to Ghana to Ethiopia to Kenya.
Right.
And Nigeria possibly, but we don't know.
So we need a credit rating system that is more in touch with the realities here in Africa and possibly has bases across the countries that it rates. And of course, we know that the African Peer Review Mechanism, African Development Bank, African Export-Import Bank, and AU Commission, they're involved in putting this agency together. Is this something you see international and continental creditors embracing? Let us know in 30 seconds, please.
I'm not very sure. I'm not very sure they would embrace it. But we have to do what we have to do for Africa. We have to do what we have to do. In fact, the threat of junk rating has now been extended to some of our development banks. Recently, I think it was Fitch that was warning AFDB that their preferred credit status rating will soon be dropped down because they are lending too much to countries that have high risk of defaults. That's quite unfair to the African continent.
All right, thank you very much for your insights there, David. It'll be interesting to see how this all unfolds. David Olujinmi, financial markets analyst with Nairmetrics. Let's get a peek into what's happening in the African markets. Of course, we're seeing mixed performance across Africa, and the NSE, Nairobi Stock Exchange, apparently down. No surprises there. I'll leave you, of course, with what's happening on the international front, right? Markets outside of Africa, but unfortunately, that's our show today on Market Pulse, brought to you by News Central in partnership with Nairmetrics. We cover the markets every weekday, 4 p.m., Monday to Friday, so make sure you tune in tomorrow for coverage of market activities. Of course, looking forward to what happens or the announcement from the MPC. Right now, I'm leaving you with the international markets.